Hi everyone, my name is Vendik and you are welcome to the channel. So we are still in our series and today we will be talking about imbalance. Okay, so I'll try as much as possible to make this video very fast. If you find value, okay, in this, you can just support the channel by just subscribing, turn on your notification. Okay, it's just a YouTube business, all right. So at least that's just one of the things you can just do to support us. Okay, you might subconsciously forget to do the YouTube business. It's very important. This really help us to know that you are finding value in what we are doing here. Okay, so without further ado, let's get to the chart so that we explain this in details. All right, when I'm talking about imbalance, okay, it's just very simple. All right, it's a moment in the market where market tends to move fast, okay, fast, and then drop inefficiency. Okay, I know this is a whole lot of English. Okay, inefficiency, especially for the people that are just beginners. Okay, so market tends to move very fast and drop inefficiency. So with this diagram on your screen now, I will explain everything. Okay, so that you understand it properly. So if time will permit us, we can go back to normal chart so that you see. I can mark it out for you. Okay, so this is what imbalance is. So if you can check it very well, all right. Okay, market tends to move, all right, from here to this point. Okay, so the previous candle that opened, all right, this week, the week of this particular candle is supposed to balance up with the previous week before this body. Okay, so that is how market does. Okay, that is the original part. Okay, how market supposed to move, right? I don't know if you understand me. The normal way market supposed to move is that every imbalance, every inefficiency is supposed to be covered up with time. So there are some situations whereby market tends to move faster and then it drop a gap and keep drop inefficiency. Okay, there is a space that it has not filled up. I think that particular word really explain it. Okay, give a space without filling it up. Okay, so when there is an imbalance like this, okay, in the next 3 4 5 6 candles, we will tend to see market coming back, okay, to fill up that space. All right, so market don't always move. It doesn't always like to move and leave those imbalance, those inefficiencies. Okay, so market would tend to come back and retest that zone. All right, and retest that zone. Okay, so I believe this diagram really explain what I'm saying. Like for example, after this, okay, we have 1 2 3. If you look at it very well, there is also an imbalance in this particular candle. Okay, but the after the one that create that imbalance, the second one, okay, the second candle, which is this white candle, it came with a wick and fill up that imbalance. If you check it, you see it fill it up. Okay, so it balance up this particular candle. So that's what market always does. So if you see we are going down. Okay, the next candle opens and then it become on it move very fast, drop inefficiency. The next candle that opens fill it up. Let me take this as an example. Okay, if actually market, okay, let's accept that this is the inefficient, this is the imbalance that we have here. Okay, market drops down. Okay, it gets to a support zone or a liquidity zone and then it rebounds from a certain zone. Okay, come back. Why is coming back here is because of this movement that happens here. Okay, he needs to come and fill it up. He needs to come and rebalance. Okay, you need to come and rebalance this particular move that it creates. Okay, and drop this inefficiency. Okay, so in the market needs to come back and fill it up. So that's why we always call another word, call it a fair value gap. So a gap. Okay, so call it a imbalance, they call it a fair value gap. Okay, they both of them are that the same thing. It's just different people looking at it in different perspectives. So it's just a gap that the market drop in between the market. So it always come back to fill up that gap. It's as simple as that. Okay, so there is no too much big explanation on it. Okay, so just know that if market moves so aggressively and drop a space between each between a candle, that there is higher tendency that the market is coming back to rebalance it. So that's just exactly what imbalance is. So this could have been a very, so immediately you see this kind of rejection from a particular zone coming to that imbalance, should be expecting a reversal, all right, from that particular imbalance, around that particular imbalance, and then you can decide to sell back, and then that is just it. Okay, so it's as simple as that. I think let's get to the chart, so that let me look for a way and see if I can get an example of something like that. Okay, so I think this is one. Okay, sorry, let me remove all my drawings. Sorry about that. Uh, okay, so I think let me use charts. Okay, okay, this was an imbalance. Okay, okay, this was very thick. Sorry. All right, so this was an imbalance. Okay, if you check from where I draw from here to this point, okay, market moves here so aggressively that these two candle, okay, let me zoom it very well so that you can see. This is what I mean. The distance between this place where this previous candle stop and where the next one also stops, okay, you can see. So there is a space here, there's an imbalance here. So this particular point here is the balance, is the imbalance that the market creates. So when you have something like this, okay, and the market moves so aggressively upward, okay, you should know that at some certain point, if you are uptrend, okay, you will soon have a rebound, okay, a pullback to that inefficiency, okay, you have a pullback to that imbalance or a fair value gap or whatsoever you want to call it, okay. But just know that when there is always a gap like this in the market will tend to come and fill it up. Okay, so the order that he left here without picking, okay, he came back to pick up those orders. Okay, there are orders that were dropping here, that were here. So he needs to come back and pick those orders and then and move. Okay, so that's just what it means. So if I don't know if he's coming to pick an order, but this is the nature, the pattern that market always move. So something like this, it's a great move if you know your bias was correct. Okay, your bias for the day was correct, you were uptrend this 15 minutes, so and you see something like this, look for a form of a buy option around this place. Look for a form of a buy option around this place, and this could have been a very clean trade. So there are little concepts like this that is not complicated, that you supposed to be trading off of. Okay, it won't cost you anything. All right, you keep it as simple as it can be. Okay, so if you notice that you were uptrend for the day, okay, and then you find a fair value gap or an imbalance like this, is an opportunity for you to look at that zone very well. Wait for a market to come to that zone and find a form of your entry. Okay, the entry I treated yesterday, now look for an entry in that zone. Okay, when you get a confirmation of your entry there, it's a good opportunity for you to buy. Okay, so it doesn't mean if you are failing, all right, it won't work 100%. That's another thing you really need to know as you're coming to the industry. All your strategies are not going to work 100%. It will fail most of the time. Okay, if you enter 10 positions and then you have 6 position as a win position, if your rest to reward ratio was good, you are definitely a good trader. You are good with that. You can live off that. Okay, 60% is more than enough. All right, so you are not, don't try and look for a strategy that will give you 100%. Okay, just look for something that will give you an average and something you can trade with. Okay, so that's it. So it doesn't mean it won't fail. Okay, it doesn't gonna be very sweet the way I just explained it. It's not really gonna work like that. Okay, there are some fair value gap that will fail. Okay, some fair value gap that will fail, definitely. There are some that won't hold. There are some movement that will happen and there is no fair value gap. There are some fair value gap that market will not come back and retest. Okay, but these things are things that we've studied, people have studied for some times and noticed, okay, this is what it always does. And then they've put it all together. All right. So please don't combine fair value gap, indicator, Just don't mess up your chart. Okay, what if you are trading trend line, just trade trend line. If you are trading support and resistance, just trade it. If you are doing price action with a good entry technique and exit technique, fine. Okay, just work with what you have and stick with it. What gives you confidence for you to trade your real money? It's not the strategy, it's not the market, it's the consistency. It's the consistency you have when you were back testing. Okay, you see the risk to reward ratio. Okay, then this gives you confidence that you can lose one, two, three, okay, on a row, and you'll still be fine with it. Okay. Okay, so these are things that makes a trader, not because you are winning your trade all the time. Anybody that is telling you that you are going to win your trade all the time, 100%, that person is not telling you the truth. Okay, so if there is anything about imbalance, this is exactly what it is. Okay, so go as after watching this video, go back test this within yourself. Okay, just back test everything I just tell you now. Go find those imbalance. It's very easy to see it. You can spot it anywhere, anytime. All right. So this is exactly what I mean. Okay. This is where this candle just moved drastically. This was the last candle. Okay. You see market tends to reverse, come back, and then initiate himself into that particular zone before going up again. So it's as simple as that. Okay, so just try and make sure you keep your trading rules very simple and then stick to them. Backtest them with the rules. This will give you a percentage that you can work with. All right. So I think the next thing we'll be talking about is the premium and discount. So I think I'll drop the video tomorrow. Okay. So these are little concepts that you really need to put into place. Okay, after premium and discount, you will start looking at more advanced stuff. But at least for a beginner and things that will keep you in profit. Okay, so you can trade only off of this and be profitable. That's what most of your mentors will not tell you. Okay, there is no magic, there is no style of system that someone that you are paying for class will tell you that is not already out. Okay, so if there is any mentor you are paying for, he should teach you application. It shouldn't teach you forex. Okay, it should teach you what is applying, what is working for him. Okay, so let him teach you application. He shouldn't come and tell you what's the definition of forex and candlesticks. Okay, he should teach you application, right? So I believe this really explain this. If you have any question, you can drop it on the comment section. I will be there always to answer all your questions. Please don't forget to do the YouTube business. This will really help us, okay, to keep posting. All right, share the video, subscribe, like, give a comment, all right, so that the video can reach out to other persons. All right. I think I'll call it a wrap here. See you in the next episode. Thank you.